Very fast. Can you see the information? Confirm you can see that information that I've shared. Someone confirm that you are able to see the information, or you're able to see my screen. Someone confirm that you're able to see my screen. Good people, you don't want to talk to me. Someone confirm that you're able to see the screen. You are able to see the screen. Good. I hadn't seen your. I hadn't seen your response. So very fast, very fast. 1 minute is over. 1 minute is over. This is similar to the one that we did last week. It is similar to the one that we did last week. It is similar to the one that we did last week, and therefore I expect us to be through very fast. You give me the gross profit, because we said that the purpose of preparing the trading and trading account is to be able to determine the gross profit. It is to be able to determine the gross profit. So who is through with the gross profit? Who is through with it? You can share your answer with us. Somebody is saying for that 586, 43,586. You are very correct. This is Wairimo. Wairimo, you're correct. Very correct. And because I have one person getting it right, I think it is important that we proceed, because it's not difficult. In fact, the same format, just replace a few figures and you're done, right? And therefore, let me proceed. Let me proceed with this. Let me proceed with this. This is the way I have prepared. You have your sales, right? And the sales figure is what? It's 94,600, as you can see, right? Then from sale, you say less return inwards. And remember, I said return inwards is the same as what we call sales returns. It is the same as sales return. So we call them sales return or return inwards. That is 1372. And you subtract that, you get a net sale of 93,228, right? From there, you proceed and say less cost of sale. And of course, cost of sales will be calculated this way. We have opening stock, which is 16,523. Opening stock is here, right? Then we continue and put in the purchases. Purchases from the information that we have is 53,397, right? 53,397. Then from there, if you look at the format, we say that the next item there should be carriage in. And we said carriage in simply is the amount of money that you pay, or the expenses that you pay to bring in goods that you have purchased to your premises or to your shop where you are selling them, right? And therefore, if you add those two, you get 54,519, right? And then, of course, there is what we call you less return out to be able to get this figure, which is 51,623, right? Of course, when you add that to opening stock, you will get that the cost of goods available for sale is 68,146. 68,146. From that figure, you less closing stock, you should be able to get 49,642, which is referred to as the cost of sales. Cost of sales. And we see that the gross profit will be able to get it by saying 93 here minus this cost of sale. Net sales minus the cost of sales. And therefore, once you do that, you're able to get 43,586. 43,586. I hope that is clear. That is exactly what we did last time. So it is repetition. It is repetition, because even the other one that we tackled was similar to this. But I want to hope that preparing a trading account is no longer a concern. We are able to prepare a trading account. Having said that, the next thing that we talk about, remember we have said that the trading profit and loss account has two parts. The first part is to prepare what? The trading account. And therefore, the next part is to prepare the profit and loss account. Remember, trading account gives us what? The gross profit. It gives us the gross profit. And therefore, the profit and loss account will start with the gross profit, right? It will start with the gross profit. And this is, let me see. Good. This is a sample. If you look at this, you'll find this is the sample of trading profit and loss account, right? If you look at it, you will find that this sales, let's return inwards up to where we get to the gross profit here, right? Up to here, that is what we refer to as the trading, right? And therefore, what we are saying is that the trading, the profit and loss account should now start here. It should start with the gross profit, right? And then from gross profit, we add what? All the incomes that the business gets. We add all the incomes. Does it mean we made a mistake? Who is this? Who is this? This is Victor. You want to tell us our calculation is not good, eh? Is it? Is our calculation okay? I might have missed that. Is our calculation okay? Let me see. 53,397, 1122. Then 22, 1112. Let me see. 53,397 plus 1122 is equals 54,519 minus 2896. 2896, correct? You get 51,623 plus 16,523. You get 68,146 minus closing stock is for closing stock is what? For 2009, 14,323. Closing. So did we get 18,504? Oh my. 14,323 to get 53. 823. So, friend, what are you saying it should be? 1122. Carriage in. Error is there. Carriage inwards. 54. But even that is still not correct, Victor. Even that is not correct because we still have the closing stock. And here the closing stock is 14 and not 18, 504, right? And therefore, I wish we could be able to redo this. This is Biosongo trading account, so that you don't write errors. Trading account for the year, and do that first March. March 2010. So that is our thing there. So that below here, we will have different columns. Let me see. Because here we have sales, of course. Sales, what is the amount of sale? 94,600, right? $94,600. You can just redo it here. Less return in. We need to sort out something there. Let's return inwards. What was the amount of return in? 1372. Can we confirm that? So let's return in 1372. So what do we get? Is the difference 93 to 28. Can you confirm that? Someone can confirm that for us? 94, 94,600. So the one who was telling us that the answer is correct. Why did you get that? 93 to 28. These things are easy, right? And then we go to the cost of sales. So we have the next year we have opening stock. What was the amount of opening stock? 16,523. We have 16,523. The next thing we have is purchases. Purchases. What is the amount of purchases? 53,927. 53,397. 53,397. 53,397. And next we have carriage in. And what is the amount of carriage in? Amount of carriage in is inwards, 1122. 1122. What will that give us? Good accountants, we always confirm the answer. So we have 53,397 plus 1122. That is 54,519. If I am not wrong, 54,519. From there, what is the next item? We less return out. What is the amount of return out? Return outwards, 2896. So here, less return outward. and which we have seen is what? 2896. $28.96, 54,519 minus 28.96, get 51,623. 51,623. 51,623. Is it? Which when we add opening stock and this, what do we get? We should be able to get plus 16,520, 68,146. 68,146. From there, we say we less closing stock, right? Less closing stock. And what was the amount of closing stock? It is here, stock as at 31st March 2010, right? Which is 14,323. So I think that is the figure that had a problem. 14,323. Can confirm if that is the figure that we have. 14 in the original question here. 14,323. 14,323. So if we less that minus 14,323, we get 53,820. We'll get what we call 53,823. This can also be called cost of sales. It will be called cost of sales. You get it by adding this, subtracting. Get 53, supposed to be there, so that now, who's this supposed to be net sales? Supposed to be net sales there, right? And this is cost of sales there, and there. I think some people have some problems with the hearing. Can you hear me now? Telling me at no sound. Are you able to hear me now? Yes. Is what we have done well understood? Is what we have done understood? Good. And therefore, I was saying that the trading profit and loss account has two parts. And therefore, I expect that the other part starts now with the gross profit. After we list the gross profit, let me see whether we had a sample. Did we? Did we have a sample? Not sure whether we had a sample of a trading and a profit and loss account. But I'm making assumptions here. Once you're able to get this gross profit, the next thing that you do is now you account for the costs that you have incurred. And therefore, you are supposed to list the expenses, right, from the gross profit. So it will be something like this. We'll have what you call gross profit. Gross profit. Let me put it here. It is always important sometimes for us to work together. This is profit and loss account. Profit and loss account there, right? And I have said that it will start with the gross profit. Gross profit listed there. Then we add incomes to the business. We add incomes to the business, and those incomes may take many forms, right? We may talk about rent received. You know, if you have rented out a building and they have paid you rent. We may talk about dividends, dividends received, right? We may talk about interest and commissions that we have received, right? Any amount of money that we have earned as a business is added to the gross profit received, right? All those commissions will be added there, right? And then you get their total. Once you get their total, you will list it there, right? And once you list it there, then you will add together with this other gross profit that you got to get another figure there, right? From there, you need to less all the expenses that you've incurred in running that business, right? You less all the expenses. And when it comes to expenses, they may be many. We may have rent that you have paid, right? Remember, the other one is an income. You received it. Now, this is what you have paid in terms of your premises, right? You have paid some rent. We may also have what we call salaries that you've paid, right? What else? What else can we have? Electricity. Electricity. What else? Good people, what else? What else? What else can we have there as one of the expenses for the business? If you paid water bills, right? It may be there. Bills, water bills, yes. Wages. We may also talk about wages. Wages are different from salaries. We may also have wages, right? I hope you're getting anything that you paid to sustain the business or so that the business can run, and it is an expense, it should be included here, right? You include all of them, here, right? You include all of them, then you add all of them to get a certain total here, right? You add all of them, and from there, you should be able to get some total there. And therefore, to get the net profit, net profit will be this amount that you got there minus the total expenses. Minus the total expenses. Now, this part that we have done here is what we call the profit and loss account. But remember, we have started with the gross profit here. We have started with this gross profit, which we had gotten from the trading account. So in our case here, this would have been the beginning figure. And therefore, if you join these two, if you join this account and this other profit and loss account, is when you get what we call trading profit and loss account. Allow me to make some changes here. So this becomes what? It becomes a minute. It becomes a sample, a vertical sample of trading profit and loss account. And we say that this account is prepared for the year ended 31st December, whatever year now you may talk about there. It may be 2019, for example, year 2019, maybe for year 2019. And that becomes the heading. Of course, it must have an owner, right? So we may talk about XYZ Limited, right? XYZ Limited, trading profit and loss account, trading profit and loss account for the year ended 31st December 2019. This heading must always be in those three parts: the name of the company, the account that you're drawing there, and the particulars of the period or the year, right? And we have said that it consists of two parts. One is the trading part, which we have already seen, and two is the other part of the profit and loss account. That's why it is called trading profit and loss account, because it has those two parts. Is it well understood? Yes, repairs, insurance, advertisement, depreciation, all those are a part of expenses. Is it well understood? Kindly confirm that before we tackle an example. Kindly confirm that before we tackle an example. This is my good class. Well understood. Economics people, we have a BCom, accounting and finance, education accounting, future teachers, right? Future teachers. Very strong courses here. Very strong courses here. I want to hope that all of us will excel. Sir, are income revenues? How do I answer that? They look alike. Revenue is in terms of sales, right? But now incomes are those specific amounts that are coming to us because of investments that we have done. Most of the revenues will come from selling the product that we have. But there are some other income that a business can get. For example, when they rent out a part of their premises to someone else. At the end of the month, he will pay what? Some rent. That rent becomes income. Sometimes they may have bought some shares in a company like Safaricom. At the end of the year, Safaricom will declare dividends, and therefore the company will receive what? We receive dividends, and those dividends become a part of what? Income. They become a part of income. They become a part of income. Oh, good. I wish this thing was live, face to face. No, we would be able to do a lot of workout. working out, of course, of these issues, and we'll be able to. I would still be able to look at your work, mark what you're doing, give examples, expect you to do them. I mark, but for now, I hope you understand the situation that you're in. Loss account recorded in two. I'm not getting you. I am not getting you. What is the difference between income and revenue? I've said that the revenue comes from, where does revenue come? From your main business. It comes from your main business. And therefore, income is, these are money that are received from incidental sources. Incidental sources, which means that that is not your main income. It is not your main income. Ningepelekwa na Rieng, eh? Hey, all right, Victor. It's always a pleasure working with you people. Sir, that format that you're using, you are not getting it. My friend, get used to this. Sahara Do, get used to this, because the other one you are referring to is not applicable here. This is an institution of higher learning, right? And therefore you must work yourself out and try and get this one, because it will be very specific in exams that this is what I expect you to do. And especially if you are an accountant, right? If you plan to tackle your CPAs, the other format, the T format, the horizontal format, or what you call T account, is no longer in use. It is no longer in use, but you can use it to practice. But for now, this is the one that we adopt here. And therefore, it is important for us to be able to get this format. And let me put it clear at this moment. The format, this format will never change throughout your career as an accountant. It will never change. What will happen is that as you rise up and as you go to second year and third year, we'll continue adding a few lines, right? We'll add a few lines to what you already have, but the format remains the way it is. It will never change. It will never change. And therefore, I don't know how you get it, whether it is memorizing it or whether it is, I don't know how you do your thing. Whether it is understand the way it is being done, and you're good. And you're good. Bad debts are still they are still expenses, eh? But we'll come to that. We will come to that. We will come to that. We will come to that. Let us cross that bridge when we get there. Are we ready for an example? Yeah, we must be ready now for an example. We must be ready for an example. And therefore, the example that I have is the one that we already have. We already have. Did we deal with the one for Nyangweso? P Nyangweso? Did we deal with the one for P Nyangweso? Someone confirm. No. Good. Now, this is it. Can we copy this then? Can we copy what you have here? Let me try and put this on one page. But we'll see whether this will come up there. No, we can copy this. Kindly copy this very fast. Copy this very fast. Let it be what you have. I want us to copy this very, very fast. Let me reduce it so that you're able to see it. It starts with the Nyangweso. Let me put this down here. I think it will be easier for you to get this. Cut it from there. Then I just have to paste it here. Still not very large. So you can write this part first, and then I will increase the font so that we move together, right? Write that part very fast. That from the following information of P. Nyangweso, drew up trading profit and loss account for the year ended 30th September 1999, right? And a balance sheet as at that date. So let us write that information very fast. Write it in your books so that you have a point of reference. Write it in your books so that you have a point of reference. I'm giving you how many minutes? 5 for you to be able to write up this. You are accountants. I expect you to be swift and the fast thinkers. That's why accounting is not for everybody, right? It is not for everybody. Not everybody can do this. And if you come from Bachelor of Economic and Statistics, or a Bachelor of Accounting and Finance, or a BCom, Bachelor of Commerce, or Business Education, which is accounting, right? You aspire to be a teacher and you'll be teaching accounting, you are equal to the task. So can you be very fast in copying out this? And once you're through with this part, I will open up the other part so that we proceed. What is it that you're saying no? I'm seeing answers for no, 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 no. Are you able to see what I have? Yes or no? Can we write up that information very fast? Good. Let us write up that very fast. We are done. You are done. Copy. Nice. 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 So we can, I can enlarge the other part. Let me see. So we can copy that other part there. That is the whole of it. Let us copy that very fast. We are accountants. We cannot afford to be slow. We cannot afford to be slow. I'm waiting. Very, very fast, very fast, very fast. We should be through with this. Good, 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 good. We are done. I hope you've included this information here that NB closing stock is 29,460. Hope you have included that. I hope you have included that. And therefore, with that information, then we can start with this. I said that this is just a suggested solution that heading should be in three parts. One is the name, which is P Nyangweso, trading profit and loss account for the year ended 31st December 1999. So can we start off there by writing that heading? And it is important for accountants, for all the accountants, it is good that you are very organized. And if you can see my work is organized, there is a way I have arranged it, right? There is a way I have arranged my work. And therefore, I don't expect less from you as a person. For those people who have those handwriting zile za madaktari, unajua, scribbling, you know, it is not legible by any other person apart from you. You must be able to sort out that, because remember, the work of an accountant is read and depended on by so many other people. It is not just your work. You prepare those accounts, they're the ones that are used by the management. They are the ones that the government would want to look at. They are the ones that the investors would want to look at, right? And therefore, you must be, organized in a way. You must be organized in a way. And you can also tell from my presentation here that, I am keen on organizing my work. I am keen on organizing what I have. And therefore, the heading first is very important, very, very important. And then, of course, we start off by preparing the trading profit and loss account. The first thing that we talk about is sales. So sales, write that figure at the end. Write that figure at the end. And for those people who are struggling, you are able to see, where do you get sales? What is the amount of sales? 186. Can you get it here? 186,000. Of course, it is million because we have 3 zeros there. So 186 millions. But you can write it this way. By the way, I think I failed to mention, sometimes the figures may be too large to keep on repeating. And therefore, like in this case where you put 3 zeros here, it means that all these are in thousands, right? They are in thousands. Therefore, you expect that from here, you'll have added another 3 zero. So this one is a short form. Therefore, this 22,680,000 means it is 23,680,000. I hope that is clear. I hope that is clear. But because we want to save time, we are accountants. We want to save time, and therefore, we must be able to shorten that. So we get the sales is 186. What is the next item that we talked about? Is we less return inwards or sales return. Do we have sales return in our figures? Yes, it is here, return inwards. That is 2050. So we less 2050, 186 minus 2050, we get 183,950. That one we call net sales. We call that net sales. The next thing is we deal with the cost of sales part. And the cost of sales part starts with the opening stock. And what is the amount of the opening stock? If you look closely, the stock as at 1st October 1998 was 23,680. And therefore, this becomes what? Our opening stock. It becomes our opening stock. Closing stock is given down here. So this is our opening stock, 23,680. From there, the next item is purchases. I hope you are able to get that. Purchases is our next item. And for purchases, look at it here. You're able to get it here from the information that you've already written. We have purchases as 118,740. From there, you add what? Carriage inwards. Remember, you have this format. It is not different from what you have. Add carriage inwards. Do you have carriage inwards there? Yes, it is right here, the third item here, which is 3,100. 3,100. My friend, you can't hear. Do you have a problem on that side? Can everybody else hear what we are saying? Can you hear what we are saying? Yes, 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 yes. Thank you. So, Waitiegeni, can you check the network on your side? Kindly check the network on your side. It is important that we are together. Good. And therefore, here we are here. We are here. Where were we? Add carriage in. Carriage in, are you able to identify it from the information that you were given? Yes, it is here. 3,100. Therefore, you add it there. Once you add this, you should be able to get 121,840. This is just a continuation, though it is in a different page here. You should be able to get 121,840. From there, you're supposed to less return outwards. You're supposed to less return outwards. And from the figures, return outward, do you have it? Return out, here it is. It is here, 3220, 3220. Therefore, you less that. Once you say 121,840 minus 3220, you get 118,620. 118,620. This 118,620 is added to the opening stock, which is up here, to be able to get what? 142,300. 142,300, which we call cost of goods that are available for sales. Cost of goods that are available for sale this year. And the next item was to less closing stock. And remember, closing stock is indicated down here. You can see it there. I've colored it yellow. That is the closing stock. Closing stock. And therefore, once you less that closing stock, you get 112,840. That becomes the cost of sales. It becomes the cost of sales. Once you less this figure from the figure of net sales here, what you get is 71,110. 71,110, which is our gross profit. Which is our gross profit. And that part alone is what we called the trading account. It is what we called the trading account. Remember now, from there again, we start on with the gross profit as 71,110, and then we less the expenses. We less the expenses. And therefore, anything that looks like an expense here, salary and wages, 38,620. That is an expense. That is an expense. Salary and wages is an expense. Rent is also an expense. 30,40. 30,40. We also have carriage outwards. Carriage outwards here. This is the amount of money that we incurred to transport goods to our customers. Amount of money that we incur to transport goods to our customers, we are calling it carriage outward. It forms a part of our expenses because we pay for it, right? And therefore so far we have salaries and wages, 38,620. We have rent, which is 30,40. We have carriage outwards, which is 2,000. The next year is what? Is insurance. Insurance, which is 780. 780. Hope that is where they are recorded. Insurance 780. Then we have motor expenses. Motor expenses 6640. It is an expense. We have office expenses. Office expenses at 2,160, right? We have lighting and heating expenses. Lighting and heating expenses, which is 1660. The 1660. 1660. And then we have general expenses. General expenses, if you can see that from your work or from the example that you had written there. General expenses is that 140. That 140. I don't think there is any other expense because all these others are not expenses, right? And therefore, you list them there. You've listed them there. After listing them all here, you add them up to get this figure. But someone can confirm if that is the figure that you are getting. You can confirm if that is the figure that you're getting. Kindly confirm. Let me also do my calculations here. It is always important for you to add the figures up, that 8. Or I can confirm with what you're saying here. Is it the figure? Yes. 58,840. Thank you. Once it is confirmed by you, I know you've added, right? And therefore, to get the net profit, you say this gross profit minus this figure that you've gotten there. So can you do that very fast? To confirm, with the type of your class, we just confirming these figures, right? Nothing hard here. Whether you did agriculture or you did CRE, relax, relax. Because these are not difficult things. They are not difficult things. I hope it is okay. It is clear that in 070. Thank you. Thank you. Thank you. Thank you. Now you know you're almost there. You're almost becoming an accountant. Because now these are some of the things that preoccupy any accountant in any office. Preparation of these things. Now, I want to reserve this part first so that we talk about the balance sheet first, and then we'll come and prepare from that information, right? From that information. I hope that is okay. We first talk about it briefly, and then we prepare it out of that information. Now, a balance sheet is a statement that gives us a summary. It's a statement that gives us a summary of all the assets that the business have, all the liabilities that they have, and the details of capital that they have contributed. Details of capital that they have contributed. The details of capital that they have contributed. Details of capital. Now, we talk about those three items: assets, liabilities, and capital. What is an asset? Yeah. An asset is something of value that you own. An asset is something of value that you own. For example, if you own a laptop, that is an asset to you, right? If you own a calculator, because it is of value, that is an asset to you. If you own a table because of its value, that is an asset to you. If you own a chair, it is an asset to you. If you have a plot of land somewhere, it is an asset to you. If you have built a house, Keja, if you build a house, that house is an asset to you. Because if you wanted to sell it, you can sell it and get some cash equivalent to its value, right? And therefore, in the business setup, we divide assets into two. In the business setup, we divide assets into two. One is what we call current assets, and two is what we call non-current assets. Non-current assets. Non-current assets can also be called fixed assets. They can also be called fixed assets. Good. Some of the current assets that you have is, normally current assets are assets that can be converted into cash within a year or less. Within 1 year or less, you can convert them into cash. If you look at something like a piece of plot, sometimes it is difficult to sell a shamba. Difficult. It can take 2 years, 3, 4, 5 years, 10 years, depending with the situation. Depending with the situation. My internet is unstable. Kindly confirm that you are still able to hear me. Confirm that you're still able to hear me. Are you able to hear me now? Thank you, thank you, thank you, thank you. Now, that's why I keep on confirming, because I don't want to lose you. Network can disappear, right? Anytime. Therefore, that's not limited only to my side. Therefore, if you feel that you cannot hear me, kindly look at the network first. Yeah, thank you, Martin. I hope now it should be clear. I hope it is clear now. I hope it is clear. Nataka niwapeleke na Rieng, eh? Yeah. Pole pole, mos, eh? So that we understand these things. It will be my joy if you're able to do these things, articulate them well, prepare and pass your exams. And I am very sure, I'm very positive that if you've been in my class, oh, you can't fail unless you want to fail, right? Unless you want to fail, you can't. Unless you want to fail. And I'm very sure here there is nobody who wants to fail, right? And therefore we must all pass. What will determine what you get is the amount of effort that you put at it. You know, some of you will get A's, some will get B's, some C's, some D's, depending with your aspiration. If you want to get an A, you can easily get it by attending the classes and doing some workings, right? Practice, right? Therefore, here we prepare one trading and profit and loss account. You look for 2 or 3 problems and try to tackle them, right? And A will become your friend. A will become your friend, right? And therefore, I was talking about the balance sheet, right? And I've talked about the 2 types of assets. I've said the balance sheet has 3 major items or 3 major components. One we have assets. 2, we have liabilities. And 3, we have capital, right? And therefore, we are looking at some of the components so that we try to understand them in a better way, right? And therefore, the current assets, we've defined them as assets that will remain in the business for less than 1 year, or for 1 year or less, right? And the example is cash and in cash equivalents. And the cash equivalent may include money that is in the bank, cash at the bank, right? We also have account receivables, or what we famously call debtors. We have sold some items, some goods to our customers on credit, and they have not paid us, right? We call them debtors or accounts receivables, right? Next, we have what we call inventory. Inventory is what we call stock. In other words, inventory is stock. Inventory is stock. In other words, inventory is stock. And then we also have what we call prepaid expenses. Prepaid expenses. And I want to just simply say that these are expenses that are already paid for, right? For example, today, if we decide as a business, we own a business. Let's assume we own a business, and for one reason or another, we decide the rent that we pay, right? Every month we are paying 10,000. Every month 10,000. But because of the arrangement that we may have in the business, we decide we will not pay 10,000. We'll pay into the account of the owner of the business premises, will pay 200,000, right? Which will cover us this year and cover us up to next year, right? Because next month, if we pay 200,000, we will not be required to pay next month, right? We will not be required to pay in January, right? Because we have paid in advance, we have prepaid, right? It is an expense, but we have prepaid. That money that belongs to the rent for next year has not been utilized. We have not used it, right? And therefore, as long as we have not used it, it is still an asset to us. Because in case we decide to terminate that relationship, then that money will be refunded to us. And therefore, it is a current asset. Number 2, we have what we call fixed assets. The second thing that we have in terms of asset is what we call fixed asset. And these are assets that remain in the business for more than 1 year, right? It is difficult to sell them within a short period of time, right? It is difficult to sell them within a short period of time. And some of these assets we have are like what? We have what? Motor vehicles, right? We have buildings, we have plots, we have big machineries, right? All those forms a part of non-current asset or fixed asset, fixed asset. On the other hand, we have what we call liabilities. And liabilities, simply put, these are monies that we have borrowed from the outsiders, right? Money that a business borrows from outsiders. We call them liabilities because we will pay for them in the future. We will pay for them in the future, and therefore we call them liabilities. Are you sure? Again, it is my network. I have already connected to a different line. I therefore don't think it is my network. I don't think it is my network. Your colleagues can confirm. Because if they are able to hear me correctly, then it means that you have an issue on your end. So can they confirm to us that I am clear? Can they confirm to us that I am clear? Clear. Thank you. Thank you. It's not mine. Thank you. It's always important for me to confirm that so that I don't lose you. And therefore, we talk about liabilities. We talk about liabilities, and we have said that liabilities are monies that belongs to the outsiders, or they are monies that we have borrowed from the outsiders for the business that we do. And amongst them is what we call creditors, right? We have loans. We have loans or bank loans. We have creditors. And then we have also what we call outstanding what? Outstanding items. For example, if we pay 10,000 per month and we have not paid the rent for, if we pay a rent of 10,000 every month, but because of difficult times, we have not paid rent for last month, that is July. We call that rent in arrears. It is in arrears, right? It has not been paid when it was supposed to be paid. That becomes what we call an outstanding what? Outstanding item. And that item, therefore, is a part of what we call liabilities. It is a part of what we call liabilities. Good. The other thing that is found on a balance sheet is what we call equity or capital. Capital, and the capital is the owner's. It is the owner's contribution. So if you are a shopkeeper, that is your business and you're the owner, right? Whenever you are investing, you'll have to put some money there, right? For you to start operation, you'll have to put in some money. That money is what we are calling what? Capital. It is what we are calling capital or shareholders' equity. Good. That takes us to what we call the accounting equation, which states that capital is equals to what? Is equals to assets minus liabilities. Is equals to assets minus liabilities. Asset minus liabilities. Now, we have two main formats. We have two main formats of preparing a balance sheet. And one is what we call the vertical format, and the other one is the horizontal format, or what we famously call the T format. Now, this is the way the vertical format looks like. I think it is important for you to copy this, right? So I'm giving you another 2 minutes. Oh, yeah. It's all right. It is all right. It's all right. Good. So can we copy that format? Can we copy the format? Kindly copy this format. Kindly copy that format. It is important that you have it because it is not changing now. It's not likely to change. So copy it. I'm giving you another 5 minutes. I'm giving you another 5 minutes to be able to copy the format. I want to hope that we are now through with copying. Already done. Thank you. Thank you. Now, this is what I wanted to say. We have two formats. This one that we have written here is what is called vertical format, and it is the one that we are going to use, right? Though I might decide to change it a little bit as we tackle an example, we'll see that. Then we also have what we call horizontal format or T format. We have horizontal format or T format, and you can see for horizontal, we list all the non-current assets, then the current assets there, then capital and liabilities are listed on this other side, right? And therefore, whether we use this or this other first one, it is still the same. Here we start with the current assets. We have we start with non-current or fixed assets, we list them. We have current assets, we list them. Then we less current liabilities, right? And once we do that, then we should be able to get what we are calling what? The balances there read. I hope that explanation is good with us. I hope it is well understood. I hope that is well understood, unless there is any question. Do we have a question? Yes, Karemia, I've already said that non-current asset is also called fixed assets, right? We also call them fixed assets. And in some instances, you can also call them long-term assets, right? Long-term assets. Now, there is an example that you have already written, right? Remember the P Nyangweso that was asking us to prepare, or we should first prepare the one that is here before we go to the P Nyangweso, right? Let us first prepare the one that is here, kindly. So in this case, we can copy this. We can copy this question. Kindly copy that question so that we separate this into different items. Agent, very fast copy that. Very quickly copy that. Can we copy that question very fast? Are we through with writing? Ah, done. Very good, very good, very good. Now, very nice. I hope people are not sleeping in my class. I can see that. I can see that. Yeah, you know, there was a teacher who one day asked the students, "Why are you sleeping in my class?" And the student was like, "Your voice is so sweet. That is why I'm sleeping." Right? And then the teacher asked the student, "Then, if my voice is so sweet, that is why you're sleeping. Why aren't the others in the class sleeping?" Yeah. And you can guess what the student said. And they are not listening to you, sir. They are not listening to you. That's why they are not sleeping, right? Yeah. So I want to hope that none of us is asleep, or is it interceding? No. Those people, you know, you are in class and they look at you, they close their eyes, you know, like they are praying for you. Yeah. It's like they are saying a prayer for you. Huh? Huh? Boy child, eh? Or is it girl child? You know, I know you, I know your generation. I know. People who will watch movies up to 4 a.m. or 5 a.m. in the morning and they have a class at 8. Yeah. Yeah. You watch a movie, a series, because it is nice, eh? You know, those captivating ones that you say, let me relax, and you watch it until before you realize it is 4 in the morning or 5 in the morning, and you have an 8 o'clock class. What happens when you come to class? You start praying for your teachers. Close your eyes and you're interceding for them, right? We don't need these intercessors in this class. Oh my, oh my. I've lost some of you. I hope we are there. 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 And that we have written the question. Yes, I will, Duncan. I will share the screen. Yes, that I wanted to sort out a few issues here before I share. It's important. Good. So we can proceed and try to tackle this one, right? And what you have to do in this case, what you'll have to do is to know what is an asset and what is a liability and what constitute capital. So in this case, building, is it an asset or a liability? Building, a building, is it an asset or a liability? An asset. Thank you, thank you, thank you, thank you, thank you. So we can go to the next one, furniture. So if I were you, I would just indicate there on the side, A, meaning asset. Because that is always the first thing that you need to do, especially if you're not very familiar with them. Eh? Good. Furniture. Furniture is an asset too. Motor vehicle. Motor vehicle is an asset. Thank you. Stock. Stock Stock is also an asset. Debtors. Debtors are people who owe us money. They owe the business money. Those are assets. Thank you. Cash at bank. Cash at bank. It is an asset, right? Cash in hand. Cash in hand is an asset. Creditors. Creditors. Creditors liability. Thank you. Liability. Thank you. And then we have capital there. We have capital, which is the owner's contribution. And then we have loan. Loan. What is loan? What will constitute loan? Liability. Thank you. And therefore, having identified that, or long-term, whatever, liability, having identified that, then the next thing is just to feed these things into, you just feed them into the format that we have said. And therefore, in the format you'll start, this is the way the format is. You always start with the non-current assets. We will always start with the non-current assets. And therefore, non-current assets, the first thing that we record there is a building. Pardon my spelling of the building here. I think I was in a hurry. So building, what was the amount? 22,000. I hope you are working it out somewhere. Building, 22,000. Furniture. Furniture. The amount of furniture, it is 11, right? 1,000. Motor vehicle, we have 11,600. And therefore, those are the long-term assets or fixed assets in a business, right? So can we add them up and get the figure there, down there? Can we add them up? Confirm whether we are getting 44,600. Thank you, Ngaire. Thank you. The next part is what we call current assets, right? We go to the current assets, and the current assets from the information that we have, let me see this. From the information that we have here, current assets, we have stock, right? Stock. We have debtors. We have cash at bank. We have cash in hand. And therefore, again, you list them in that order. I don't want to talk about the order that is supposed to be there at this time. Later on, we'll be looking at why we are starting with the stock and then debtors, then bank, then cash in hand. So can we confirm? Can we confirm? Can we record them there and confirm? Can we record them there and confirm? Can we record them there and confirm that it is 32? Good. Now, in this case, this is what I want us to adopt. I know the format that I've given here, sorry for that. I know this format that I've given here has listed them in a different way, right? It has listed these items in a different way. I was not able to correct the format that I would want us to use. But now in this case, I'm giving you the correct thing. After you record the current assets, the next thing that I want you to record there is current liabilities or liabilities. Just call them less liabilities. Less liabilities. And there you record them. And how many L's do we have that you have identified in the working? We have two. One is for the creditor at 5,000, and the other one is for loan at 10,000. You will get a total of 15, right? Once you get that total of 15, you less it, or you say total assets, total current assets minus total current liabilities. You say total current assets minus total current liabilities. That is 32,000 minus 15,000 to be able to get 17,000, which is the net working capital. You get 17,000, right? This 17,000 should be added. It should be added to the non-current assets that we had here, which is 44, right? Should be added to 44. And therefore, we will say this 44 plus 17,000 to be able to get 61,600. 61,600. Then that is can be referred to as the total assets. The total assets. From there, we go to the second section of the balance sheet, which is telling us financed by. And in this case, we include what we call capital. We will include what we call capital here, right? Capital. And what is the amount of capital? In our example here, it is 61,600, right? And therefore, when we record capital here, it's supposed to be double lines. And therefore, I expect something like here double lines, right? And here double lines, which means 61,600 has balanced with the capital, which is 61,600, right? It has balanced with capital there, which is 61,600. I hope that is clear. I hope this is clear. This is the format that I want us to adopt, the way it is, the way we have done it here. And therefore, once you are able to get this, sorry, let me clear this. Once you are able to get this format, it makes your work very easy, because your work will be just to write and know, is it a current asset? You put it there. Is it a current, is it a non-current asset? You put it there. Is it a current asset? Put it here. Is it a current liability? You put it there. Is it capital? You put it there, and you're good. Now, if it doesn't balance, then it means that there is a problem. And remember here, there are some instances, I'm not very sure that that was captured somewhere here. There are some instances, once you're able to complete this capital, right, you'll be expected, if you had been requested to prepare the trading profit and loss account, the loss or the net loss or the net profit that you get is supposed to be added here, right? You're supposed to add. So let me see. Unfortunately, I may not be able to. Am I able to write? So for example, here, I would have come and said, you add what? And writing is difficult. Add what? Net profit. I hope that is clear. And I write that amount there, right? And then I also come here and say less. I hope you're getting what I'm saying. Less drawings. And the drawing simply means that this person had taken some goods for personal use. So I come and say less drawings there, right? And then I have my figure total there, which should balance with this amount that is here. I hope that is clear and that you're able to see what I've done. I'm saying this problem that we had here is complete, but in some other instances, where we had been requested to prepare the trading profit and loss account, and we had drawings in the information. This is how we would account for them. This is how we would account for them. Is that clear? I am longing to hear that yes, or to see that yes written there. Is it clear? Yes. Thank you, Malanga. Thank you, Gecheo. Very clear. Now that we have said that, remember the Pinyangweso problem? Do you remember the Pinyangweso? Is a problem that we had worked on here. You remember this Pinyangweso? This Pinyangweso, we had been requested to prepare what? Trading profit and loss account and a balance sheet at that date, right? And therefore, if you look here, you will find that we have information that relates to what? That relates to a balance sheet. Information like the premises, motor vehicle, fixtures and fittings, debtors, creditors, cash at bank, drawings, and the capital. All those items relates to the balance sheet. And therefore, what I want us to do, and this is an exercise, I'm giving you 10 minutes. No, 10 or 5, 10. I want you now to use this information that is here, right? Use this information that is here and construct a balance sheet for P Nyangweso. Construct a balance sheet for P Nyangweso. Construct a balance sheet for P Nyangweso. I hope it is clear. I hope it is clear. So 5 or 10 minutes. 5 or 10 minutes. What do you require? 5 or 10? 10. Sawa. It is 16:05. Can you prepare it very fast then for P Nyangweso? The balance sheet. So P Nyangweso balance sheet as at. No, 15 is too much, Rosemary. Here we are accountants. Very clean in our workings and very fast. Those are two elements that should always guide you. Nice presentation, and then of course, you do it very, very fast. Very, very fast. And for that matter, make sure it is nicely done. Make sure that it is nicely done. I may require those people who are able to share with me to share with us. I want to see what you're doing. Take a good picture. You can take a good picture and share with us or share with me. I would want to see how you are doing it. So we work on it very fast. Nzomo, Purity. Can you work on your thing? Can you work on it? Very fast, very fast. Very fast, very fast. 10 minutes. You have 10 minutes. Billy, you've been there for 2 hours. 1 hour is or 45 minutes is not much. You can still wait for us. Oh, yes, yes, yes. I am back. I am back. I am back. I am here. Can you hear me now? Can you hear me now? Can you hear me now? Confirm you can hear me now. Now, those people who have got 127, 127 what? 430. In a way, they are correct. But we don't need, do we need opening stock? I hear people, I'm seeing people commenting that what is the opening stock? Do we need opening stock when we are preparing a balance sheet? We don't. What we need is the closing stock. It is the closing stock that we need. It is the closing stock that we need, which is here. It was 29,460, right? And therefore, I don't know who is sharing with us what they have done. You can share with us what you have done. You can share with that what you have done. Can you people share with us what you have done? Shafi Alumasi. Shafi Alumasi, can you share with me what you have done? I need to see your book. Shafi is putting his phone off because I've requested him to share with us what they have done. Who is willing to share with us what he has or she has done? Who is willing to share with us what they have done? Who is this? No, I would if you put it close to the camera. I should be able to see it. If you put it close to the camera, I should be able to see it. Why not? Why not? As long as I know you are putting it, I should be able to see it. If you raise your hand and you tell me you want to share, I should be able to see your book or what you have written. Bruce Kiprono, you want to share with us? No, even a picture is good and you can send it here. Yeah, you can send it here. Even a picture is okay. You can either send it or put it as one of your status there. I should be able to see it. Whichever, even in WhatsApp, you have my number, or you can put it in the group, in your group WhatsApp. Put it in your group WhatsApp. You can put. I think that would be the easiest, so that you also see what others are doing. Put it in your group WhatsApp. I'm giving you a few minutes. Put it there. Put it there in your group WhatsApp. Or you fear you can put it directly in my WhatsApp. I don't know, but if it can come into the group WhatsApp, that would be good. So far, none has put it in the group WhatsApp. None has put it there. Some of you are very fearful. Yeah, you don't want others to see what you have done. Is there anyone putting it up? Anyone putting it up? You, the handwritings are very personal. I can see. For Matembaya, very personal. None is willing to sacrifice. You just put your rough work. We want to see. We want to see. Thank you, Sahara, for even sharing this. Thank you. Thank you for sharing. But is it complete? Not complete. It is not complete. You've only done the first part, 127 for 30. You've not done the part of financed by, so that you list the capital, the net profit, and the drawings. We wanted to see now, not at the end. Thank you, Sahara. I like the fact that you're bold, the fact that you got it correctly. You're learning something. Anyone else who has shared? Let me see. $144. Oh my, financial accounting. Who is this? You are using a different format, my brother, my friend. I see 3 columns. You are just putting 2. That's why it is confusing. Who is this? This is Essie. Essie, a good trial, but we can do better. We can do better than that. We can do better than that. It's important that I am able to know what you, even if you send 100 of them, I should be able to get them here because, who is this? This must be excellent. This one, don't know who has posted it. Posted by who? Excellent. Thank you. Even if you share it with me personally, because I know you have my number. I don't know who this is. Times it is important. This must be, yeah, that name. Thank you. 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 Nobody else want to share. Nobody else want to share with us, but it is okay. You can share with us, but the only challenge is we'll have done, looked at it, and therefore I want you to take your book and mark what you have done against what I'm giving you here, right? Can mark for yourself, and therefore we say we start with the Pinyangweso, as you can see here. Balance sheet is at 30th September 1999. And we start by recording the fixed assets, or what we have called non-current assets. Non-current assets. And non-current assets, from the information that was given for Pinyangweso, we have premises at 50,000. We have fixtures at 3,500, and we have motor vehicles at 18,000. Motor vehicles at 18,000. That gives us a total of 71,500. You can confirm that. You can confirm that. Then we proceed to the next part of the current assets. And for the current assets, one, we have stock. And the stock that we are talking about is the stock at the end, closing stock. Because remember, the balance sheet is being prepared at the end of the period. And therefore, it is not the stock that we had at the beginning that will matter. It is the stock that we have at the end, which is the closing stock. So 29,460. You can see that one is here. Then we have debtors. That one is direct. We have cash at bank, direct, giving us a total of 73 to 40. 73 to 40. We less current liabilities. And for the liabilities, what we have is the creditors at 17,310, right? Therefore, if we less that, we get a net of 55,930. If we add these two, we get 127,430. How do we know it is balancing? We must be able to work on the second part of the balance sheet. And the second part is where we say it is financed by one, capital, and the capital is given there as 126,360. Then we said that we add net profit. And the net profit that we are adding here comes from the profit and loss account that we have prepared. Remember this profit and loss account where we say that the net profit here is what? 13,070. 13,070. And therefore we add that 13,070. Then we less or subtract drawings. And the drawings had been given in the problem that we had. The drawings here is given as what? 12,000. 12,000 here, as you can see here. So if we subtract that, then we'll get 126,360 plus 13,070 minus 12,000, and this will give us 127,430. 127,430. And therefore, if you look at it, it is balancing, because on this side we have 127,430, and then on this other side we have 127,430. That's why it is the balance sheet. We're supposed to check whether it is balancing. And therefore, we have 127,430 there, 127,430 on this other side. And therefore, it is balancing. Any query, any question on this? Any question on that? Any question on that? No. No question. Waiting for anyone with a question. Clear. It is very clear. So, my friends, we have been able to prepare what? We have been able to prepare trading, profit and loss account, right? And we have also been able to prepare the balance sheet, right? We've been able to prepare balance sheet. And therefore, if there is no any other question, I would wish to stop there. But ensure, if there is no other question, I would wish to stop there. But ensure that you go through a few of these questions, do some few problems on trading profit and loss account and balance sheet. You can be 100% sure that that area must be examined at the end of the semester. You must have a question asking you to prepare those two. That one must always be there. So for those people who are struggling with the format, kindly ensure that you familiarize yourself with this format, right? And the only way to do it is to try and calculate as many problems as possible. That will give you an advantage in that you'll be able to know how different items are being treated. Remember, the items that we have captured so far are the most common items. They are the most common items, right? But you may have, for example, other current assets that we've not mentioned here. And therefore, it is important that we are able to do what? To differentiate between the asset, differentiate the current and non-current assets, differentiate the liabilities. My friend, notes are always sent. They cannot teach you something I don't have notes for. So what I have here is what I will send, right? What I have here is what I'll send you. And of course, this also will also be factored in the YouTube channel, right? And therefore, you are able to hear what we have said today, right? And you're also able to do what? You're also able to have the notes that we have. Now, one important thing, what determines whether you'll get an A or a D in this subject is whether you practice or you don't practice. For those people who will say they have understood and they don't need to practice, it will be a shock on you. A shock on you. Yes, we have a cut soon. I have not even announced that. I'll be announcing it today, right? We are ready for a cut now. Good people. We are ready for a cut. What do you think? We have come from far. We've read so many things. We have come from far, right? Yes, we have come from far. We have come from far, and I know what we have learned now is worth examining. And therefore, yes, we are going to have a cut, most possibly next week on Monday. Notes zitatumwa either leo ama kesho. I'll try as much as possible to send them the earliest time possible. Me, I can't fail you. Nyinyi ni watu wangu. Watu nguyas, eh? My people. I cannot fail you. But I'm worried that some of you might want to fail me. Yes, next week. Actually, the notes are already on the portal. Thank you, Wairimu, Rach. But there are a few corrections, eh? Rach, there are a few corrections. So I'm going to pull down those notes and put the one that we have here, right? Therefore, if you had downloaded it, you can download again. Shafi, what about the entrepreneurship webinar? No, these are just, no, you can attend if you are an entrepreneur. You know, we won't talk about entrepreneurship. So if you are one, you can attend. If you aspire to be one, you can attend and listen. I don't think it is compulsory per se. Huh? Yeah, it's not compulsory, but you can still attend if you want to, if you have that time and you have an interest in entrepreneurship. Don't worry, the register will be ticked. Sisi ni memorial. Nisiwaangushe. Siwezi kubali, Jona. Siwezi kubali bwana. Emailed what? Kako Ann. Can you contact me on WhatsApp? Contact me on WhatsApp. Register nimemark mara mbili, nimemark mara mingi. Now, those people who are saying I marked them absent last week, you need to ensure that you get back to me and you supply your who ni waidiegeni supply full names and your registration number on WhatsApp kindly. No, it is not at a cost, Duncan. It is not at any cost. The webinar is free. You just need to attend and listen to what they are saying. Kibe Christine, it means that you are not present in other classes. That's why you only marked one. No, I cannot. I think, have I allowed you to mark yourself? No. I haven't. Yes, Rogers, you can. Yes, Duncan, you can. Yes, Victor Oyunge, you can. I just wanted to answer a few questions, a few of your concerns that you have. It is always important to touch base with your people, right? It's always important. Thank you, Gitonga, Jacqueline. No, it is not for some student. Probably there was an issue with your contacts. You can still attend. Get a link, get the link. If you are interested, get link for, actually it is posted in the group. If you are a member of that group, you should be able to see it. If you don't have it, ask for those from those who have, they can forward it to you and then you are able to log in if you're interested. From the first topic, Mutugi Martin, to where we are, I should be able to examine you on that. From the first topic to where we are.